Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update on commodities. I'll give you my financial opinion. And what we're going to do is we're going to look at the charts of the DXY 10-30-year yield. We're going to go through precious metals and all the commodities that I follow. And if you guys need any help with anything commodity related, you can obviously sign up for finding-value.com, the Platinum membership. And Today, we've got the midweek update for Platinum members, so I wanted to bring that up as well. So if you're a member, check for the midweek update. I'll be releasing it here anytime now. All right, guys, let's dive in here. Let's give you some opinions and what I'm seeing in the market. So the DXY, the dollar, this is a relative strength indicator. It is going lower, in my opinion. We had a little bit of a reversal move here 3 trading days ago. And we're getting a little bit more selling pressure today, kind of a bearish engulfing type setup. I would favor this with the momentum. I would favor it all to grind lower over time. Now, when I talk about grinding lower, going up, moving, I am a long-term investor. And I know people say, oh, it's because you can't get the short term right. That is exactly why I'm a long-term investor, because people can't get the short term right. That is correct. And overall, what we try to see are these big long-term breaks. Big long-term break, DXY is going to most likely go lower with a statistical probability. Then you look at the market conditions, and all this kind of ties together. This here was a we'll call it an increasing interest rate environment, and the monetary tightness in the dollar was more tight than other currencies. Now what's happening is that other currencies are remaining stable. They're not really doing much of tightening and loosening to the same degree, and the dollar could tighten could loosen in relationship to other currencies, and that's where that value of the dollar is derived from. When you look at this, this does have the Batman pattern, where it's usually a topping pattern. It has a lower high. Sometimes the high goes and be a double top, but this does, to me, look like we could potentially go lower over time. And this is kind of the overall view of what this thing looks like. The TNX, which is the 10-year yield, is dropping dramatically here, down 2.99%. So the markets here, we've broken this downtrend or uptrend line to the downside, and it is still heading lower. So we've got lower dollar, lower yields. And that typically means that the markets think that inflation has peaked. Now, has inflation peaked? Everywhere that I see, everyone says inflation's peaked in terms of the growth rates, the inflation rate, I should say. It was 9%. It's coming back down. We've got a couple of data points. And I'm not so sure about that. What they did is they basically sacrificed the Strategic Petroleum Reserve release to get oil under control. The next thing that could peak in inflation is housing. Those are a couple of main contributors, and everything else kind of just flows through from oil, because everything's just a derivative of oil to some extent. So right now, people think that we are going to go into a recession, a depression. A lot of people are scared, and I'll be honest, guys, this is like the most predicted recession that I've ever seen. And usually when everybody gets on one side, usually it doesn't come true. But either way, yields are falling. That is a fact, and it looks like it will continue to fall in the short term for yields. And conversely, bond prices, I think, will continue higher in the short term on higher. Now, we've had a massive sell-off in bonds. This is the sell-off here from the top to bottom, so to speak. Hopefully you can get that to, there it is, show back up. So we've had a massive move lower. And I will say that these things move in cycles. You don't go straight down. You usually get, it comes up. That's an A, B. Yeah, so it's a large correction. It's basically, if we were to look at this, we have the bear trap here, or bull trap, the bull trap here. Oh, it's just going to keep going higher. Then we have a 3-wave pullback here, all the way to the bottom. And I'm not an Elliott wave expert, not pretending to be one, but I can see 3 distinct waves here. And then we're coming on up for some relief pressure. Now, this doesn't mean that we're going into a bull market in bonds. It also doesn't mean that yields are necessarily just going to go back to where they were before. And I'll give you some long-term charts on this here real quick. But bond prices, what I think are doing is we've broken through this. We've had a massive move to the downside from here all the way to the bottom. And now we're getting a relief rally. I do not think that this is going to be a big secular move in bond prices. I think it's going to be a short-lived move to the upside to some level, maybe even back to this 124, and then we'll turn and probably head back lower at some point. Or maybe it even goes a little bit higher. We'll see what the patterns go, what they scribe out here. We'll watch it together. But that's kind of my guess looking at it right now. TYX is the 30-year yield that is also dropping. And they basically fell at the same rate. The 30-year and the 10-year are falling at the same rate in terms of yields. So the curve is basically dropping, but it's still inverted. That's what's going on. And we can see that in the TYX-TNX ratio, it's 0.08. So we're basically on this support level, just moving sideways. And what I've found just kind of playing around with stuff is as this goes up, it's really good for gold and silver. As this goes down, oil did very well, and gold and silver does not like the curve inverting. So think of it as strengthening currency here, kind of more of a loosening of currency in this general other area. And the curve is inverting versus normalizing. This is a normalization. This is an inversion. And we're going from larger and larger swings over time in this megaphone pattern that started in 1988. So the swings are getting bigger and bigger as we go. And that means that there's greater and greater opportunity in some of these investments as these swings become larger. And it also means that there's instability in the markets as this curve swings back and forth at greater and greater levels. That's why we're seeing this. Now, we're at a favorable level down here for precious metals to outperform. This is usually where I look, and you can cost average in or do whatever you want. I've been cost averaging in since 2019, 2018 back here and kind of buying it up. I didn't know about this chart. I kind of just developed it or just started looking at it. I should say I didn't develop it, but I was looking at it, and that's one thing that I noticed. And I'm just watching it and seeing how it plays out with the markets right now. But it's very low and probably favorable for precious metals. We're getting a bigger pullback in commodities. We very well could pull back even further than where we are today. But right now we've got a falling wedge. We've broken it to the upside, and we're possibly doing one large retest. Oil is a main driver of this, and we very well could drop quite a bit to the downside if a move like that wants to happen. We have a nice long-term uptrend line that has been broken to the downside, and we are starting to possibly roll over. And I would get more concerned if we break basically below the 264 level. We could see more of a sell-off occur. So what a lot of us think we think this is a wave one. We're going to get a wave two pullback to some degree, and then we'll see where it goes to the upside. And right now we're in that pullback. This could be a false breakout to the upside. I will remain open to that. And if we break below this level here, then yeah, I think we could potentially have one. The CRB to S&P 500, we're right here at that support level. We'll see which way this thing breaks. It does look favorable for the S&P 500 to outperform in the short term. Is this a double top? I think it could be in the short term where we could pull back and consolidate for a little while. That is a large possibility. But with the deficits out in the future in 2023, 2024, out that type of way, I think commodities will outperform the S&P 500. Short term, though, we could see some downside pressure. Gold doing quite well, up $13.74%. Again, weaker dollar, weaker yields. Gold likes that, and it looks pretty good. I don't see too much selling pressure in that circle there in terms of the size of the candlesticks in relationship to the up candlesticks. So I think that gold looks excellent for a move higher. Still looks good and game on. That also is signaling that there's some sort of liquidity in the system that's coming in. Inflation. Looking at silver, silver is also outperforming gold. We're heading higher, up 2.43%, and this looks really good with the large up candlesticks, small selling pressure. It's stair-stepping higher. Platinum also looking good today, up 1.89%, a little bit of a wick at the top, so not the strongest of all days, but still looks good. And it is, it's not quite a bullish engulfing, but close. And we have broken out of massive patterns. Now, one thing I want to talk about is, just so you guys remember, the three humps. The three humps is a consolidation period. One hump, second hump, and then this third hump. And then now we're starting to come back. Usually it's a lead-in pattern, and then we usually break. The three humps are the consolidation period. And this looks good because we've broken also out of this other pattern that we created, which is a flag, kind of a flag pattern that we've come and broken to the upside. And we're getting a little bloody nose right now on a monthly candlestick basis. That is a continuation pattern to the upside. It's a tall guy with a little bloody nose, is what I call it. XAU to gold ratio moving higher. And when we break this line here, that is the line that we need to break for happiness. The happiness of gold and silver mining companies. We are getting there real close, and we could break this thing. Now, if we break this thing, we should see a good move in gold and silver mining companies and an outperformance against gold. That usually happens when gold goes higher. So we could be on the precipice of a big move in the gold and silver mining companies when we break this area. Right now, we've been dilly-dallying just underneath it. And I think it will break. We've got higher lows coming up into it. There's your lows, and we'll see if we can break through it. GDX moving up 1.94% today. We were back in that support level that I said, hey, I like buying in support levels. That's how I work. And we're back against this resistance line. We're just pausing underneath it. If gold continues higher, I expect this to continue higher. SILJ also up 2.17%. We've broken out of the resistance area. It still looks very good for a potential move to the upside. Breaking the falling wedge in a down consolidated fashion. We consolidated. And usually what you see is you get this wedge, and then you get this kind of move that looks like this. So it's a move that looks like this. And then we go higher. You can see that move there. I always see that type of pattern form, and then we break. I call it the kind of consolidation sideways pattern. Crude oil came on down. We have broken below this support line. Now, the question is this a false breakout? Now, I think it is. Other people the price watchers are going to tell you why this is down and that we are going to zero and it's going to hold down there in some deflationary period, and they're negative, negative, negative. All right. I don't think so. I think this is going to be what's called a washout. I think we're going to wash everyone out. People are going to get short down here, and then it's going to rip to the upside at some point. And the reasoning is China reopening, strategic petroleum reserve releases will end, and all of this will basically paint a very bullish picture. So what I am watching is the inventory levels of crude oil and seeing what they're doing. If they continue to decline, then we should see a move higher. But right now, the high-cost producers at our $100. We are below the cost of production of the high-cost producers. So high-cost production in some of these areas will pull back, or they will not invest in some of the growth of those high-cost producers when we need them to invest in the growth of the high-cost producers. So we are under the high-cost producers cost curve. We can remain down there for periods of time. I am saying that that can happen. And we could very well come back into the 60s if they want to push it on this washout. Natural gas looking a lot better today. Are we going to get down to the $4.95, $5 region? It's possible. But with today, we had a nice good bounce today, 6%. Usually at these bottoms, you'll get like a wick at the bottom. You'll get a bearish piercing, some sort of bullish engulfing. It's very close to a bullish engulfing, where the opening and closing price engulfs the one before it, but we haven't. It's not technically one, but it's pretty close. And sometimes these guys put bottoms like this in, and we could potentially go higher, or we move sideways. Again, I'm not in this for the short-term movements. I'm in it for the big long-term investments. But one thing I will say is this: remember the humps. One hump, and the second hump looks like this, and then the third hump has like a nice little move. There's your 3 hump of a consolidation potentially. And you can see one hump, the second hump, and then the third hump, and then you go again. 1 hump, 2 hump, 3 hump, and then go. Just like this one: 1 hump, 3 hump, the third hump, and then it jumps, and then it jumps, and it's getting bigger and bigger. So I do think that we are close to the end of this third hump, and I think it's a matter of time. And that's where I start looking for opportunities. XOP, yeah, you know me. So again, 1 hump, 2 hump, and then this here is the third hump. Now, the third hump, when I watch a lot of these things, is sometimes they come all the way back to a bottom, like down here. Sometimes they find it higher, and other times they don't even pull back. They just run. So we're putting in these 3 humps. I think it's an opportunity, and the way that I handle this is through cost averaging in. So if I don't know where the exact bottom is, I call sprinkling. I sprinkle some money in. And if we come back a little bit more, I sprinkle some money in. I cost average in over time. That is my strategy. And we're getting this washout in oil. I think the fundamentals are still there to move higher. And obviously, some people are going to debate that. But the fundamentals are lower inventories. We've got China that is on lockdown still, that which, in my opinion, will reopen very soon or is reopening. Their demand for oil is going to go up. And if strategic petroleum reserve releases end, we're going to see a deficit, and inventories are going to draw down very quickly. So I think that oil is a great spot to be. I also think that we're below the cost curves of the higher cost producers. And I'm going to invest in the higher cost producers because of the leverage of the move. OIH still heading lower here. It does look like we could head lower back to a retest of the breakout. So one thing I want you to pull away from is we don't just go straight higher. We go higher, pullback, higher, pullback, and we get these pullbacks and consolidation periods. We're going to enter a little consolidation period, probably move down here to the downside for a little bit, and then we'll break on higher. But everything's good from a long-term perspective. We've got a broken trend line, and now we're going to consolidate above the trend line, which is very common. The Sprott Physical Uranium Trust up a little bit today, 0.56%. I still don't see the buyers over here yet. So I do think there could be more downside potential in the Sprott Physical Uranium Trust before moving higher. We've got URNM. It was flat today. I'm looking for the bottom trend line here to pop up. Let's get off logarithmic. And we are flat today, just moving sideways. I want to wait and see if the buyers come in here and throw in a bottoming candlestick. If they throw in a bottoming candlestick, I'm going to get ultra bullish. So I'm basically looking for some buying pressure to show up in a reversal candlestick. A reversal candlestick can look like a bullish engulfing like that one. It could be a candlestick that has a big tail on it with a hammer. So it comes up and comes back up. That is also very bullish. That's what I'm looking for the next move. Then that means that this is a false breakout. We've got real large negative sentiment out there, and this is usually when I get very bullish. TAN coming back a little bit. I don't really have much money in tan, guys, but it still looks good to go higher. I'm not a believer in the fundamentals of tan. I think that their energy costs and the commodity costs will deem this to be a special use case. I'll put it that way. COPX, again, it's barely down today, down 0.36%. And whenever you see these like small selling pressure days, that's usually bullish. If this stock was weak, you would see massive down candlesticks coming back. But it looks pretty strong. I think that the buyers are still in control and that we could potentially still head higher over time, a grind higher. LIT, I mean, it's an up day, 1.4%. Looks all right. We're just grinding sideways. You look for these three hump patterns, and this, you could get a little lead in, and then you go, sometimes it basically goes into a dead period. Sometimes they just go sideways where the buyers equal the sellers after these three humps. But we did enter this from the top side down. So this is usually a consolidation period. This could break to the downside, maybe. But it is a consolidation period, and we entered it from the top side down. We'll see which way this thing breaks. REMX, 1.15% higher. This is sitting on top of a large support zone. That's blue lines, the big support zone. And right now, we're just moving sideways. Still looks good. I don't see any large selling pressure on the right-hand side. SPX down barely 0.19%. And we've broken this to the downside. We have to see a bounce and break through here if we're going to go higher. So if we could bounce up a little bit and then roll back over, this is a rising wedge. Generally, these things go and break to the downside. So generally, this is a bearish formation. The NASDAQ also slightly lower, down 0.51%. It doesn't look horrible. You could kind of say that this is a flag pattern that's down, where this could break to the downside. And I don't have a horse in this race, guys, but I'm overall bearish to neutral on the overall indexes, like the NASDAQ and the S&P. Emerging markets slightly lower today, even though the dollar was lower. Still looks good. We've broken the downtrend. Everything looks all right. XHB heading higher, 1.84%. Lower yields, lower dollar, and XHB looks really good here, actually, to go higher. Now, I'm not taking a position in it. I'm just holding on, but this does look like, to me, almost like a double bottom pattern that will actually move higher. So this looks very bullish for home builders. And what this is, if you go and back way out, is a consolidation period that we just went through. So we had a major basing period from 2007 all the way till the breakout of 2020. We broke out, we did a return move, and this is the return move, and I think we're putting in a bottoming pattern for this return move and an eventual move higher in the home builders. MU is, let me see, it's basically sideways today, down 0.16. Big basing pattern, we've broken to the upside, and that also has this kind of bottoming type pattern. It's right above support. Doesn't look horrible. Copper. Copper is still going higher, 0.72%. Still looks good. We've broken the downtrend. That's what this white line going across here. We broke that. Now, if we break above 394, we're in an uptrend. We are in an uptrend at that time. And we could see much higher copper prices. We are below this long-term resistance line going across here that we had a lot of resistance in previous history before. If we clear all of this, we are going much higher. Here's your 1, 2, 3 hump pattern. The breakout, the consolidation back, the washout behind it, and then the break. And that is what's going on in oil right now, is this portion right here. If we look a little bit in, let me focus on this so you guys understand kind of what's going on and what I think is going on. So you get a consolidation period. There's your 1 hump, your 2 hump, your 3 hump. It kind of broke on down. We have a consolidation period or a washout, and then I think we're going to roll on higher. What this generally, the way that I view it is that we get a break. This is the bear trap. It's going to get a bunch of people sucked into it. Everyone's going to think recession, depression, all that stuff, and the big boys load up in here. Everybody gets off sides. They all get short, and then this thing's going to rip higher because everyone's short and they have to cover. That is the slingshot move. And your lead-in pattern that I usually see is a pattern that looks like this. It goes up, sideways, and then the back pull back, and then the rip higher. Lumber also going higher, confirming our beliefs in the home builders. We've got a bullish engulfing on the weekly candlestick there. On the dailies, we are moving higher at an okay clip. It's not earth-shattering move higher, but we'll watch it and continue to see where it is. I know a lot of people think that, lumber going lower, we're going to be in a recession. Guys, this looks like it's recovering to me with a declining wedge. Those guys are behind the curve. Iron ore, again, we're in this big, gigantic consolidation pattern that is coming on down. I can actually move this one like that, if I can actually see these guys. And we're coming back and forth, and I think eventually we'll work our way higher, break out of this, and this correlates very well with the Baltic Dry Index. Aluminum moving sideways. I'm a big bull in aluminum. 2024 and 2023 look horrible in terms of the supply deficit of aluminum. It looks great for aluminum prices, horrible for any consumers of aluminum. I'll say it that way. So I'm a big bull on aluminum. Baltic Dry Index, this guy is wedging up. We're up 1.28% today on the dailies, but we're wedging up here to break to the upside. It's going to be positive for the Baltic Dry Index. Coal continues to move higher, up 2%. This is on the weeklies. I still think it looks all right. It looks like we had a little kind of false breakdown here. So if I were to draw on this chart, we had a resistance level there, and then we were coming on up, and we broke out, did a little fake out, and we'll see if we can break and move higher for coal. I could do a double top here too and kind of do like a shoulder, head, shoulder type move. It's possible. But that broke out of a very long base. Very long base. And right here is where the home builders are at. Right there is where copper's at. There's a lot of other things that are right there. MU is there. REMX is there. So we're all kind of there or down here on a lot of these breakouts of these long-term double bottom patterns. This thing is, I would say, further progressed on the move higher. Ethereum's down a little bit, down 3.19%. Does look like it wants to head back a little bit in the short term, and same with Bitcoin, down a little bit and could head back a little bit in the short term. This does, to me, looks like it's trying to put in a base. It doesn't mean this. So usually when I see this is usually like the end of trend pattern. You go sideways, and then usually you go higher eventually, and then a lot higher at some point. But these end of trends, they usually get these washouts. These washouts are what scare people. And then all the shares exchange hands down there to the smart money. I bet you if you look at smart money accumulating Bitcoin, they're probably buying it right down here. That is my guess. So this here is much like what oil's doing. You're getting a washout before the end of trend move, and then we rip higher. The big end of trend move, if you guys are wondering, I'll just go back to crude oil. The big end of trend move of the massive secular bull market of commodities and oil and whatever else happened right here on this washout in 2020. So what happens is you get the first hump, you get the second hump, then you get the third hump, and you get a washout. This was a massive washout in oil. That's where I got super bullish. Now what we're doing is we're basically putting in this first this first leg. Let me back out. The first leg here, that is what this leg is here. And we're trying to find where this bottom's going to put in. There is a possibility that this does pull back all the way to even $50. There is that possibility out there. But I entered big amounts in here. I've been cost averaging in even in certain areas of my favorite companies because they're very cash flow rich. Hedges are rolling off. They are becoming more profitable with time. Even if the price of oil goes down, they are still more profitable when a $50 hedge rolls off at $72. And I'm looking for good entry points on my favorite companies. And I'm looking for the end of trend type move. Now, is it going to go much below this support level that we're at? I don't know. We're going to have to find out. But that's what I've got for today, guys. And hopefully I didn't, that was actually ended up being 30 minutes. Wow. But if you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website if you'd like, the Platinum membership. I'll release a midweek update here shortly. Gave a lot more opinions on this one here, on my thoughts, to get you guys a little bit more, hopefully comfortable looking at a lot of these things. And that's all I've got. Gold, silver, platinum still look really good. They're probably some of the leaders, along with copper and some of these base metals. They look pretty good. Right now, what's under attack, and I can see very large negative sentiment, is oil and uranium. And that's where I start to get bullish, is when the negative sentiment comes out. This is where I get really bullish, I should say. I'm bullish. I've been bullish the entire time. I'm not a perma bull. I'm a bull for the secular bull market in oil and uranium, which is probably going to last 5 to 10 years. I'm going to be a bull for 5 or 10 years based off this. That's the viewpoint. But we're going to have these large pullbacks in the middle of it. That's just the way it happens. It's the way markets work. All right, guys. We'll catch you later. Hopefully you're having a good day. This is Finding Value.